afterwards. What we're going to talk about today is credit score basics and also 7 simple steps to elevate your credit score and dominate your future. This is something I put together a few years ago. I call it secrets those credit doctors don't want you to know. This book actually came out of me being, I guess, ticked off at people getting ripped off from all these credit doctors out there. A few years ago, there was quite a few people that were putting this out, these companies, a lot of them were multi-level, and some of these people trying to teach you about credit didn't even know about their own credit and had bad credit. The stuff that I learned, it was actually from working with my clients and people with loans when I was a mortgage broker back many years ago. And I learned from the credit bureaus. This is all stuff from trial and error. None of this stuff is based on theory. None of this is based on books, except what I put in my book. This book here, the one you see here, it's Secrets Those Credit Doctors Don't Want You to Know. This is one I updated and I put together a few years ago because I had one before that with a workbook that I wrote the books never to sell them. I just made them to give people information because there was so much misinformation out there from the credit doctors and from some of these sources. And I don't care if they had attorney behind their name or not. There's a lot of them out there. And as far as I was concerned, there wasn't any of them that were worth anything. I used to question them all. So but the other books, the first one I did with the workbook, I had them separately. Well, Larry King did a thing a few years ago on credit secrets, it was called. They were selling a book for like $40. And all of a sudden, I noticed, and I didn't even know he was doing an infomercial, but there was about, we sold tens of thousands of copies of my other book. But one of the problems was the workbook was separate and it didn't have they weren't together. So people bought the workbook and they weren't happy with that. So I updated this, something I wasn't going to do, but I put this together, and that's what all this is based on that we're going to look at today is on actual facts. If you want to know, you want to get deeper than what we're going to talk about with the basics, you can. You can get a copy of this book for around $20 on Amazon, but I'm not trying to sell you a book. This is not a sales webinar or anything like that. This is strictly for your education. So that's what we're doing today. So, little disclaimer, I'm not giving you any advice. I'm not your advisor or anything like that. I'm not a lawyer. I don't even play one on TV or none of that kind of stuff. But I'm going to give you everything I know. This is based on actual facts. If you stay till the end and you want a copy, I will give you a copy of the slides so you can have it for your personal educational library. Okay, let's get into this. Well, what are credit scores? Well, credit scores, they range between 300 and 850, pretty much for mortgages and a lot of things. Some of the industries go up to 900, like auto loans and stuff. They have a little different thing they look at, but most people are going to fall between the 300 and 850 range, depending on what you're, what you're looking for, what you're trying to get credit for. That's how they score these. All right. And most people are familiar with the FICO score. FICO is actually just one of the scores, and that's involved with Experian. There's 3 credit bureaus, that reporting bureaus. FICO is the one that's most common for, and I don't even know why, but that's the one they look at, that most people are familiar with. So Experian is actually the company that has the FICO scores. Then we have an Empirica score, which comes from TransUnion. Now, a lot of these depends on what part of the countries that you live in or what territory. Most of the time, though, you'll get a tri-merge report when you're going for a mortgage. They call it a tri-merge report, and they're going to pull up all 3 bureaus and kind of compare them because not all the information is on all 3 bureaus at the same time. And then the third credit bureau, reporting bureau, is Equifax, and they have a beacon score. And then sometimes I've seen it called a pinnacle score. So either one of those, but those are the three bureaus, and they're what the most common things you're going to run into. But FICO score, I like to point that out and just kind of tell you the difference because that's what most people know about. What are credit scores? They're actually predictors, is what credit scores are designed for. They're designed to show the likelihood that a borrower will become 90 days late on an account within the next 24 months. So it's really that simple. I was told that from the credit bureau guy who we used to get our credit bureaus, our tri-merge reports from, the guy who taught us about credit back many years ago, and that's what it's from. So they're just simply predictors. All right. Well, why do we care about our credit score? Always a good question. Well, it's your ability to borrow money. Most of us don't have the cash, especially starting out, to just pay for everything in cash. I mean, that used to be a thing when our grandparents, were around. They didn't borrow much money, but then as time went on, things got more expensive. And that's something important. So they did come up with these bureaus and just people's ability to borrow money. I mean, you want to be fundable is what you want. You get better interest rates. It's amazing if you ever calculate the difference on these. I get into these a little bit more in some of the books and things that we've done, but just a matter of 1 or 2% can make a tremendous difference of tens and hundreds of thousands of dollars over the lifetime of some of your loans. Lower insurance premiums. This is something that used to not come into play, but it has in the last several years. Is one of the first things they look at is your credit score to see if you're a good risk for insurance premiums. There are some other factors such as zip codes and things if you're looking at homeowners or renters insurance that are also a factor, but previous claims is another thing. But your insurance is really based on a lot of your credit score. That's one of the first things they look at today. More favorable for employers, business partners. First thing that employers do these days, they're going to pull up your social media, look at your accounts there, and then they're going to pull up your credit score. They're going to look at this and just see how you've handled things. This is why I like to keep my credit in line, because you get to choose who you want to do business with. You have a lot more choices. You don't have to go to somebody that's based on impaired credit. You don't have to go to a creditor like that. You get to actually choose who you want to do business with. Well, how are credit scores determined? This is a good breakdown right here. This will give you an idea of what's really important and what they look for. 35% is based on your payment history. Do you pay your bills on time? I mean, it's just that simple. How do you pay everything? You run late? Do you consistently run late? Do you use your grace period, whatever they call it? We'll talk more about that in a few minutes, but it's just based on your history. 35%, that's important. Pay your bills on time. Types of credit. What types of credit? Do you have mortgages? Do you have auto loans? Do you have store cards? Do you have payday loans and that type of thing? Home equity loans. 10% is just what type of credit accounts you have. Next would be new credit. If you have a lot of new accounts or inquiries, a lot of people don't realize this could be this can actually be a big factor because it's 10% just on getting inquiries. You don't want to run around getting inquiries all over town because that's that can actually take away from your score. 10% may not seem like much, but you could make the difference in a good borrower and just a fair borrower. So that's something to be aware of. Credit history, how long you've had accounts. A lot of times people will close accounts when they pay them off. That's not always in your best interest because the length of time you've had your on the history can make a tremendous difference. 15% is huge. And this is one of the biggest things that a lot of people overlook. 30% of your overall credit score is determined by the proportion of balance to the limits that you have on your accounts. We'll talk more about this here in a minute too. All right, let's go over the 7 steps and then we'll get into a little bit more detail. What we're going to talk about here, these 7 simple steps to elevate your credit score and dominate your future. These are pretty simple. We've broke these down over the years. It can be a lot more complicated, but I like to keep things really simple. Kissers, as I like to say, keep it simple, really simple. And this is what we've developed over the years. Number 1, seems obvious, pay your bills on time. Number 2, don't necessarily close older and are paid off accounts. Number 3, don't get unnecessary inquiries. Number 4, keep your balance in proportion to your limits. Now, they typically say 30 to 40% or less. Yeah, I like to say a lot less, but we'll kind of look at that a little bit in detail here in a minute. Dispute incorrect information. There is a lot of things out there today that may or may not be correct because there's just so much stuff. And a lot of times people are just data entry people that put stuff on there. There's a lot of stuff that is correct too, though. So you just need to be aware of what it is. And you can also add a fraud statement or really any kind of statement on your credit report. I'll show you an example of some that we've used over the years here in a few minutes, but this is something that a lot of times it doesn't help your score, but it can actually help your case if you have something that's maybe doesn't look favorable. So that's something that that we'll talk about here in a minute. I've got a sample that you're welcome to use too. And then self-monitor. You want to kind of look at this stuff about once a year, sometimes more often if you're doing something. And we'll talk more about that in a few minutes here too. Okay, the first thing, the number one thing really is to pay your bills on time. This seems obvious, but a lot of people, just think maybe it is not that important. Today we have automatic or direct payments. Sometimes you still mail it in. You want to make sure you get it there on time, though. But there's some of the more advanced things I've seen lately. I mean, if you get into some really advanced training, they'll say that you don't want to pay it too early today, that you want to get it on time, exactly on time, because that could fluctuate a couple of points. I personally don't worry about that as much. I do pay most of my things on the ahead of the due date, but sometimes you want to pay it exactly on the due date, but you definitely want to have it there before the date is due, or at least by the due date. 30, 60, and 90 days late, that's what they look at. They put you in categories. So if you have a running 30-day late, a running 60-day, or once you get 90 days or past or later, that can be a big deal. So that's you definitely don't want to get in that category. Now, things happen to a lot of us as time goes on, and you can get out of there. The longer you go, if you start making payments on time again, the longer you go since the last payment, that will be taken into consideration, especially your score will reflect that. Things stay on there those 7 years and actually 10 years if it's a bankruptcy, and sometimes more. And sometimes you can dispute stuff and get it off of there, but you really, you just want to be aware of that. And if you have maybe a 30 or 60 or even a 90-day late that's a few years old, it won't reflect as much, even though the creditors can see this. And there's ways you can explain that. We'll talk about that more in just a little bit here. And then grace period. I always like to talk about grace periods because these are really not in your favor. You'll see maybe if your mortgage is due on the 1st, and then they'll say you have till the 15th before it's considered late. Well, yeah, that's probably true with your mortgage company or whatever the creditor is. They're probably going to charge you a late fee if you get over that, even though it's not 30 days late, and they will not report that typically unless it's 30 days late. They can't really do that. 30 days later, it will show up. Now, if you get it in between that period, between the grace period, what they call it, and maybe the 30-day before it's late, they may not show up on the credit bureau, but they will charge you. And there's other things that can come into that. Which, like if they monitor it and some of that kind of stuff. So we'll talk more about that in a few minutes, but that's something. Typically don't use a grace period because it's really not in your favor. One of the things I noticed also when I was a mortgage broker is they will put on interest for every day that you don't have it by the due date. And even if you're in that grace period, when we used to get payoffs, if you made a payment, say 10 days, into your grace period, they'll charge you interest for every day on that. So that's something to be aware of, just on when you pay your bills, getting them there on the actual time, that'll save you money in interest, even if they don't report it late. Don't necessarily close your older or paid off accounts. A lot of times people will get accounts paid off and we'll say, oh, let's go ahead and close it. It's not always in your best interest because there's a big percentage that goes on the history of your accounts. And that could be, that can make all the difference sometimes just on a few points. So it isn't that you necessarily have to use the account, but you don't necessarily want to pay it off. Number 3, don't get unnecessary inquiries. Now, this is something that, sometimes people will go out and they'll shop for stuff and get inquiries all over the place. Now, they do give you a window, something that you did not used to do, where they'll see if you're applying for a mortgage. They typically will give you maybe a 30-day window where they'll let you have multiple inquiries, within a reason. Like if you have if you have 10 or 15, it might be unreasonable, and they don't really tell us what the model is. But they'll give you a window where that doesn't really count too much against you. Same thing with the auto loans. You'll typically get a few weeks or maybe a month to shop for a car. A couple of things, though, that I do want to point out on this. The things you don't want to get unnecessarily inquiries on are, you'll see this a lot too, free gifts and promotions. When I used to go to the stadium a lot for football and actually baseball games, well, the football in particular, they'd give you, I think it was MBNA, used to have a booth set up there all the time, and it was always packed because you'll get a free stadium blanket if you apply for credit today, one of their great credit cards. Well, that's fine, but that's a hit on your credit. That's a hard inquiry. So that's something you want to be aware of. You don't necessarily want to get the blanket just to get, and get yourself a unnecessary inquiry, because that's what that includes. Another thing I typically would see a lot of too is discount for new accounts. This is usually store cards, which are some of the worst accounts you could have. People go to Macy's or Dillard's or one of them, and they'll say, oh, if you just apply for the credit today, we'll give you 10% off right now. Well, it sounds great, but here's the problem with it is it really messes with your proportion of balance to limits. You'll be buying maybe a $500 item or maybe a $490 item. They'll give you like a $500 or $600 credit. Well, that right off the bat takes you all the way up to the maximum amount of credit. You might be a good borrower and think that's not a big deal. You're almost better off buying it with either the cash or with your debit card or a regular revolving credit card, MasterCard, Visa, one of those, because that's something you might already have established, and you're not going to take quite the hit on your proportion of balance to limits. But a lot of people do that, and it's just something you need to be aware of, because unnecessary inquiries can take off to 10% of your score. And I've seen that happen so many times. If you're maybe at a say a 680 credit score or something like that, but 10% could be like 68 points, even 60. If that takes you down to a 620, that puts you in a whole different category. Okay, instead of being able to maybe borrow 85 or 90% on your house, it might put you in a 75 or 80% category. That could be huge. And that could be just from simple stuff like this. So that's something to be very much aware of. Proportion of balance, keeping your balance in proportion to your limits. Now they say at 30 to 40% or less. I typically like to keep it at 20% or less, because that can be a huge difference. This is like 30% over your total overall score. You can have perfect payment history. You've never missed a payment. I've seen this so many times, but people will keep their balances way up. And that typically happens at lower credit limits too. I mean, a lot of times you'll be paying this and wonder why your credit score is low. Well, this can be why. I've seen this happen so many times. And the examples I like to use, let's say you have a $100,000 credit limit. Okay, and you have a 20% balance. Well, that puts you at 20%. With everything else being in line, such as making your payments on time, this is just fine, and it will not count against your score. But let's say that you have only $1,000 limit, but you have a $900 balance or $900 balance. Well, that puts you at 90%. Even though the amounts are way less, the scores don't really reflect, or they don't really care necessarily what the amounts are. It's the percentage. So this right here is huge. And that's something you want to be aware of, just to keep stuff in line, because 30% of your overall credit score is a lot of percentage. Okay, what about incorrect information? Well, you can dispute that. When you get a copy of your credit report, you look at that. If you see anything that's incorrect, and this is the exact template we've used for, actually a couple decades now, but this is basically keep it this simple too. Now, some of this stuff you can do online. I personally like it when you mail it in, and you can even have it, have a tracking number. You don't necessarily have to have a sign for it, but that way they'll have to, you'll be informed when they do get it. But it's simply this simple. To whom it may concern, there's some incorrect information on my credit report that needs to be verified and corrected. And whatever the account name is and the number, it's not mine. I don't owe them. Please verify the information, delete the account when updated, and let me know when it's corrected. Here's what happens. There's about a 30% chance this will happen, even if the information is correct. Now, I'm not telling you to go out there and dispute correct information, but I've seen people do that. But then there's other things to be aware of if you do that. But here's what happens is the creditor has, now they say, I think it's 30 days they have by law to get out to them, anything you dispute, and then back to you. It's typically not always 30 days though. So, I mean, I don't know what you could do if you have any recourse, but just, when you do this, give them some time to get back with you, and they will. If they don't, the creditor has to pay whoever this is that you're disputing the information from, even if it's an old account that's paid off and closed, or even if you maybe still owe it. They have a certain amount of time. They have to get back and either pay a fee saying it, yes, it's the account, please update the information. So that could happen. They could say, no, it's been paid off and everything's great. And, and it's not their account, whatever the case may be, they will take that off. Or they can just do nothing and then it drops off. That happens a lot of times, but just be aware, you could be waking up some sleeping dogs when you do that. So just when you dispute incorrect information, I would recommend that it's incorrect to begin with, and maybe verify that. But you don't have to. You can try this and it may work on correct information. I'm not going to tell you to do that, but I've seen people do this. Fraud statement. This is, and any other statement, you got up to 100 words or less on your credit report. This is something I've actually used for myself in the past, and I actually still do now. But when I first came across this was after I got divorced many years ago, and I had some stuff that got behind. Some of the stuff I knew about, some of it I didn't know about. It was a big mess, and I had to really dig myself out of the hole. That was way before I was a mortgage broker, and I had to get myself in line to get an FHA loan. There was a lot more to my own story, but we're not here about my story. But this is simply how it is. You can explain yourself, but using this same thing for a fraud statement is huge today. This is how simple it is. And I do this today. And in fact, I've had my banker actually tell me I was a pain because he had to do this, but this is what I do. And you need to update this, do this about once a year or so, but you just write simply, to whom it may concern, due to identity theft concerns, please add the following fraud statement to my credit report. Do not extend credit to anyone using my name or social security number without first obtaining a government issued picture ID. That right there is huge, because if they give anybody credit for any reason whatsoever without this, you can sue them. And also call me on my personal phone for further verification. Now, when I originally did this, I put my my landline on there. We don't have a landline. I have it for years now, so I use my cell phone. But this is something, those two things right there will prevent any kind of credit fraud. You don't need to pay somebody else to monitor this stuff and do all this stuff for you. You can do this right here yourself. My banker used to tell me I was a pain because they'd have to wait till I got home, and I would be in the evening and then call me. But that's okay. That was a double verification, so nobody could steal my stuff. And I encourage you to do the same thing. This is something you can do right now. Now, as far as what I was telling you earlier about when I got divorced and I had some things going on, I just simply said, due to the fact that I was getting divorced, I had to relocate. Actually, a lot of things happened. I lost my job at the time. I had to redo some stuff. I got behind, but I made everything up and I could explain it. This does not help your credit score. I want to be clear about that. It does not help it one bit. But what it does do is it lets you explain your situation. Sometimes if you're borderline, maybe it's been a couple years, like in my case, and they'll look at that. And sometimes they'll just laugh about it. I mean, because they looked about the stuff about the devastating, just some stuff like that was kind of actually comical, but it's not comical because you can explain yourself. This is very serious, but this will prevent you from anybody using your information for in case they want to set up an account or use an account that you already have. So this is that's a pretty important thing to know right here, and keep it this simple. And just send that to all three of the bureaus. You can do some of this stuff online. I still like to mail stuff in myself, like I said. And here's the other thing too, that we've the last several years, IRS fraud has really gotten crazy. People will actually, and I've seen this happen to a lot of people. Actually, it's happened in the mortgage business more often than I actually thought of. But people will actually go in there and somehow get a hold of your stuff and get your tax refund, create a completely false return, and get several $1,000s back. I've seen this happen so many times, more than, in fact, on more than once, even on the same people. And what they'll do is they'll get a big refund. Then you have to deal with that yourself. So this is a way they can prevent it. Now, this is good for W-2 employees. If you're like me and you're an entrepreneur and you have business income and things like that, you don't have W-2, then it really doesn't apply. But this is something to be aware of. And this is stuff you can share with people right here. This is one I gave you this site. This is what they have online. I still like to mail all the stuff in myself, just for several reasons. It gives you more of a record, but that's something I just wanted to put in there in case you are a W-2 employee. That's something you can do. And it doesn't hurt to be, proactive instead of reactive to some of this kind of stuff too. If you do this in the fraud statement right up front, it's just less things you'll have to worry about down the road, because, I always look at it like, with the most burglar alarms that are sold is the day after somebody gets robbed or burglarized. Do it up front, and the same thing with your fraud statement. Just do, you're better off if you do it up front, then you don't have to have that, that doesn't happen. So self-monitor. This is something that I do recommend about once a year. It's you can do it more often if you want. I would just do it once a year though, and just take a look at it. Now, where would you get these? Well, they're okay, once a year, every 6 months sometimes, but there's some free services out there. I'd kind of recommend those. Credit Karma is a good one. I think there's another one, Credit Sesame or something like that. I've used Credit Karma for, I don't know, many years now. It gives you your score. Now, this is not a true tri-merge report. Like if you were to apply for a mortgage or some kind of major credit there, this is not one I would use, but this will give you a good idea, a good snapshot of what's going on right now. Okay. And, this will tell you your accounts. It will show if you're current, if there's anything you need to look at. Some of the fee services out there, they are actually the actual credit bureaus themselves. Now you can do a free one once a year. That's easy to find, and they'll do it, but they typically will not give you your scores. That's one thing I do like about the free service, is they do give you your, somewhat of a score. Now, this is not a score, again, like I said, that they use, but this will get you in the ballpark. The fee services, they'll give you a free one, but then they want to charge you money for it. I've always had issues with those though, because even based on my own circumstances, I did this many years ago just to go through the process. And some of the stuff at the time I had maybe 15 or 16 mortgages. Actually, I think I had maybe a few more than that, but I couldn't even remember all the stuff to verify my own stuff. So it was really more of a waste of time. And then I got a hard credit inquiry, which is kind of crazy. So, because there are hard credit, inquiries and soft ones, which is something that you want to kind of be aware of. A soft one is just if they'll check, like account you might have, just to make sure they'll monitor if you're currently doing it. But a hard credit inquiry is if you go and get the stadium blanket, or if you're applying for something new. So that's just something you want to be aware of. But I would self-monitor these at least once a year, so you can kind of keep track. And do this only when it's necessary. You really don't want to do this when you are applying for something, which is what we'll talk about kind of right here. Okay, so which brings us up to, what if you're starting with no credit? You're reestablishing impaired credit. A lot of things happen to a lot of us. I told you about me getting divorced, and some things happen to me, but it happens to a lot of people. We all have life go on. And then what about if you have just a limited ability to obtain credit on your own for whatever reason? Well, you could have a secured credit card account secured by your assets. One of the things we used to do a lot of times when I was in the mortgage business to help people establish or reestablish credit is you could go right to your bank and just see them. Now, not all the banks will do this, but most of them will. You can take as little as $500 or $1,000, put it in a credit or in a savings account, and then talk to your bank about giving you a secured credit card based on the money that you have in there, the secured amount. Now, what typically we'll recommend is just use a little bit. A lot of times these will be a lot higher interest rates. You might be paying 20-25% interest on some of these accounts that are secured, but it doesn't matter. Sometimes it's not the interest rate you pay, but what you get out of it. There's There are some other accounts that will establish these, and we've talked a little bit more about these and some deeper things, but there's some accounts that will start you off with a $300 or $500 card to give you a second chance. They might be charging you 25, 28%. It doesn't matter. What I normally recommend, buy a tank of gas. Well, I used to say a tank of gas a month. Now it might be a little bit more than that. But if you got a $300 limit, let's say it does cost you $100, just do that once a month and pay it off. After about 6 months, even with no credit or limited credit, that's going to really work on improving your score. And that's really what we're talking about here. This is a way to do it. There's no quick fix. There's no magic pill. There's nothing, no overnight way to do this. Although I've seen, scores, we've increased scores 150% in 1 month. I've also seen them go down, because once you start doing stuff with your credit, sometimes you're going to wake up stuff that you don't want to wake up, and it's going to be a building process to get out. Co-signer or authorized user on someone else's account. This can be very effective and very good. You do got to be aware of this, though. If you sign for anybody else, make sure that there's somebody you can be trustworthy, somebody you can trust, because if they don't make the payments, it's coming to you. Then again, you can put somebody on your credit card, just make them an authorized user. I've seen this happen a lot for children or people that actually have gotten divorced and things happen like that. Somebody that needs to reestablish some credit. But just if you're going to let somebody else be a authorized user on your account, I would recommend not giving them a copy of your credit. Don't give them a duplicate card. Just do not do it. That's what I would recommend. Now, this, if it's your kid away to college or something like that, and you want to do that, just really kind of monitor that kind of stuff. As far as a car loan, I personally would not sign for anyone for that. Those are almost a horror story. That almost equals, we used to joke about it, equals 7 years of bad luck anytime you sign for somebody else for a car loan. But you can use that. I've actually seen one that worked out over all the years when we used to do it, and it's usually even on when they voluntarily give it back and things like that. Very rarely does it work out in your favor. So just be aware of that. Make sure it's a trustworthy relationship. If you do that, if you're somebody that needs to be an authorized user, though, just be aware of that and respect whoever it is that's going to help you out. Bankruptcies, Chapter 7 is actually a debt elimination. We're not going to get much into that, but what that does, it completely wipes out all your debts. You're going to need an attorney. You're going to need to go to court. There's a lot more to it than that. As far as your credit score, though, goes, most of the time, you'll be probably flooded with offers anytime you file this, and especially right after it is discharged, after you go to court, because it does wipe out everything. You're starting off with a clean slate. Even though it all looks negative before that, you're going to start off from now, and then you'll have a chance to reestablish your credit and start over. As far as a Chapter 13, this is a restructure, repayment of your debts. The court will actually come up with a plan for you. This could actually help you. I've seen people one day out of a Chapter 13 after they paid it for several years, paying back all their debts, and then they could actually even get a 95 and 100% loan after that. We've done it. One day out of bankruptcy, we had it all set up because after you're making payments for a while, 6, 8 months, 12 months, it actually looks like on-time payments again, because that's what it is. It doesn't necessarily, even though stuff shows up, it doesn't necessarily matter what's happened up until the court date, but it's going to show from now on. But then that all has to be taken into consideration. This does not wipe out things. It just restructures it and gives you a little breathing room. Sometimes that's what people need. And one thing I really want to make you aware of, collections judgments, I call them sleeping dogs, because like tax lien stuff like that stuff doesn't go away. You're going to have to deal with that. But some of the collections and judgments, even medical things, sometimes, they put this stuff on your credit report, and sometimes if you'll go for you're going for a mortgage or something, they're going to require you to get some of this stuff straightened out, either pay it, get it cleaned up. Sometimes you might have had this already paid off. And if that's the case, just tell them, see if you can get that removed. Sometimes, though, you're going to wake up a sleeping dog. Let's say you haven't heard from a judgment, that somebody that reported something on there, maybe an old cell phone or even a payday loan or some of that kind of stuff. for maybe, 5 years or more, but you go ahead and they start looking at your credit, doing something. If they get contacted, you may be waking up that sleeping dog, I like to call it, and they're going to start hounding you again. All of a sudden, instead of an old judgment, it could be a newer one. Once that stuff is updated, that dramatically and directly affects your score. If you do need to have anybody, you have to have a judgment or a collection that's paid off for, in order to get a loan or something like that. I would normally recommend a third-party negotiator. This does not necessarily have to be an attorney, although sometimes it helps. We used to do that in our collection department, in our mortgage company. We had some people that actually did that, and I'll tell you why a third party person works a lot of times, because they're not emotional. Sometimes, people, and it's not that you might do it directly, but like, let's say you did get divorced and you still have a bitter taste in your mouth about that. You can, it's easy to get emotional in some of this kind of stuff. Emotions never help when you're messing with legal things. Very rarely, I should say, do they ever help. So if you have somebody else go in there, and here's what they can do too. They can actually negotiate a better price. Let's say you have a $5,000 judgment that needs to be paid off before you can qualify for a mortgage loan. Well, you might be able to go in there, and here's what we used to do. We'd say, well, hey, we will give you, and I'd see what we had to work with, but we'd say we can give you $2,232.27. I like to use exact numbers because it is accurate a lot of times. But what happens, they'll most of the time they'll look at it like you've really put some time and effort into figuring out what you have to work with. Just say we're going for a mortgage loan. This is what we have to work with. The other thing that you want to be sure of, if you do this, whether you do it yourself or have somebody else do it, is have them remove it from your credit score based upon when they get your payment. So what I mean by that, let's just, the example we use, the $2,200 or whatever we agreed on to pay it at the same time, and have that on their letterhead that they get their payment, they will completely remove this from your credit report, from all three of them. Get that in writing and make sure that that is done. That right there, just from that elimination, it may take you a few days or even a couple of weeks before it shows up with your on your score and it's adjusted. But this is a great way to actually get this stuff removed. I've seen judgments, collections removed that were only a year old, or sometimes even less than a year old, even though they can stay there 7 years or more. So this is a great way to do it. And just those templates I gave you on the letters here, that's the stuff we actually use just for that. Okay, what not to do. Let's talk about that for a minute. First of all, do not go to a credit doctor or repair company. And again, I mentioned this earlier. I don't care if they have attorney behind their name or whatever. I have questioned, I don't know, so many of these over the years. I have never seen one that could do anything you cannot do yourself. And everything we've talked about today, this is all stuff you can do yourself. It doesn't cost you a dime. One reason I put this stuff together, because we used to work with our clients. I've worked with them sometimes as much as a year, 2 years or more, just to get their credit line. This is something that doesn't happen overnight, but if you go get, and what really got me a couple of years ago was this company came around. I don't remember what they're called, MSC or something like that. MES, I don't know. It was a multi-level company, and I questioned a bunch of these people. Most of them didn't even know how the stuff really worked, and all they were doing is trying to get you on there at $99 a month. Okay, well, they didn't do anything for you. Then I've seen them actually ruin people's credit because they didn't stick with the $99, thinking they were getting helped. With the self-monitoring, do this kind of stuff yourself, and you don't need these people. And if you get into that, just be aware that it may not help you at all in the long run. Other thing, don't use a credit monitoring service. And this, there's a few of these out there now. They'll act like they're sitting around watching your credit for some fraud. They're not watching anything. What you're actually doing by paying your $39 or $69 a month or whatever it is, whatever they charge you. I think some of them suck in at $19. What you're doing actually is buying insurance. Okay. If you read what it actually says, it's like, well, we'll pay up to $1 million if somebody gets in here with fraud and all that kind of stuff. Well, I just showed you how to put a fraud statement statement on your credit, but all you're doing is buying insurance. They're not going to watch this, and they really don't care. If they can prove somebody actually, this is a process too. In the meantime, your credit's getting hammered, and you might have collectors going after you for this kind of stuff. You don't need to pay for any of this kind of stuff out there. And the other thing is, sometimes the credit account companies, I know some of the credit card companies will say, oh, we're going to automatically, as a benefit for your account, we will monitor this every month. That's most of the time not in your best interest either. And I'll tell you why. If you read the fine print, what happens is, if you look at the fine print, is some of these people say they'll monitor it every month. Well, you'll have to really read it, because what happens, and I've seen this happen more than once, if you get behind, say 30 or 60 days late on another account that has nothing to do with them, by the terms of the agreement that you agreed to, they can raise your interest rate and change your terms. And they've actually do it. And I don't know what it was. One of the cards, I won't mention the name because it's a pretty major one. Not a Visa or MasterCard, but one of the others used to do this all the time. And I've seen them go from maybe a 15% interest rate up to a 38% interest rate, just because somebody was late on a different account for different reasons. And actually the account was tied up from an ex-spouse or a soon-to-be ex-spouse, and they were responsible. And it doesn't matter what the judge says in court. If you're on the credit account, you're directly responsible. Well, if they see that you have a late charge on there, this monitoring service, which you think is helping you, is not doing you any favors. It will actually cost you money. So just be aware of those things right there. Other thing is, don't work on your credit right before a major purchase. I used to see this happen all the time. By not self-monitoring once a year and just seeing what's on there, people wait till they're ready to buy a house or refinance, and all of a sudden you had something, and it may not even be yours. It could be a collection with from somebody with a name similar to yours. This stuff happens all the time. Well, you may not have time to work on this. If you only have 30 days and your interest rate's going to change, or whatever the case may be, and now you've got to work on your credit, because sometimes this stuff takes a few months before it gets straightened out. We talked earlier about they have, in disputes, they have 30 days by law to get back in touch with you, and it may or may not happen. So just be aware of that, and that's why it's better to do this stuff up front. So those are three major things I think you just need to be aware of, what not to do. So those are the 7 simple steps. Pay your bills on time. Don't necessarily close older and are paid off accounts. Don't get unnecessary inquiries. Keep your balance in proportion to limits at 30 to 40% or less. Again, we talked about a lot less. I'd really like to keep mine at less than 20%. Dispute incorrect information. You can also add a fraud and or any kind of statement you want up to 100 words, and then self-monitor. And that's our credit score basics, 7 simple steps to elevate your credit score, dominate your future. And this was based on the book I wrote a few years ago, Secrets Those Credit Doctors Don't Want You to Know. If you would like to have a copy of these slides, you're certainly welcome to do that. Just send me a request and send it to my email, thedealionaire@gmail.com. So